Hello, it's John Burford with tramlinetraders.com, and I'm covering in this short video the relationship between commodities and equities. And the ratio at the moment is at an all-time low, at least since the early 1970s. This is a very instructive chart. This shows the incredible peaks in commodity prices compared with shares, and the incredible ups and downs. But notice the peaks are pretty sharp. There's three of them there, and that is usually when commodities have blow-off phases, where the prices of some commodities just goes exponential. But anyway, I want to draw your attention to this area here, which is where we are now. We're starting to move a little bit off that. Now, the price of commodities has been depressed by many things. Overproduction, for one thing, and talk of recession and lower demand for things like industrial commodities and so on. But I want to make a case that a strategy of going long commodities and not necessarily short equities at this stage, that may come later, and I think it will come later. But I think the case for a new bull market, which could last for decades, perhaps. These are decades, taking up to a spike, just like in the past. I think there's very much on the cards. And I want to cover one market in particular, which I think has potential for a very, very sharp advance. Okay, here's the weekly chart going back to 2020. It had a tremendous bull run, which we took advantage of for the clubs. I would say that would be wave 1, wave 2, long and strong, wave 3, wave 4, and the final push-up is probably the end of the fifth wave of this entire impulse wave. It made a high around the 100 mark. But since then, the market has actually plunged in what I think is an ABC, to a low, recent low at 20. Now that is an 80% decline in quite a short order. That is really the result of the overproduction of nat gas that was inspired by the very high prices that the drillers could achieve. And but now we're right down here, groveling around the bottom. But we have a tremendous momentum divergence working on the weekly chart. And also, I want to draw your attention to the relative strength index. It recently made this hit on the 30 level, which is the oversold level. If you go back in history, you'll notice that it never reached the 30 level since that point there, that early 2020 region here, when the market was gathering its loins for a pretty substantial rally. So that is quite historic, I believe. So this is an extremely depressed price level shown by this 30 line here. We've got a momentum divergence working here, and so the odds are very strongly aligned to a rally phase which is getting started now. And a piece of news just came out that the US drill rig count has dropped at the fastest rate since 2016. And of course, that's because of the high prices. They were getting high prices, everybody was drilling for gas, but down here, nobody was drilling for gas because they were getting low prices and not making any money. And that is the typical commodity cycle. High prices is the cure for high prices. Low prices is the cure for low prices. So I believe establishing long positions in this region here will pay off handsomely. I hope you like this video, and I invite you to sign up to receive my weekly blogs and also to check out my 3 trading services, all with free trials available. For VIP Traders Club members, I issue specific trades with price targets and coverage of stock indexes, forex, T-bonds and commodities. The new Phoenix Traders Club trades is aimed at smaller accounts. Again, I issue specific trades. And my Pro Shares service covers individual UK and US shares. Remember, I offer free trials to all 3 services. Just go to www.tramlinetraders.com.